Okay, we're live.
All right, hey everyone, welcome to our DeFi and Oracles panel. Today we've invited guest speakers, David from Lithium, Oscar from Convergence, and Eric from Injective. Thanks for being here today, guys. We all share an interest in building an open source community and developing the Oracle ecosystem. Let's start by having each of our guests introduce themselves. We'll start off with David and then move on to Oscar and then Eric.
Sounds good. Hey everyone, I'm David, co-founder Lithium Finance. I'm an entrepreneur. I'm passionate about inclusive financial innovation. My team and I at Lithium really feel the traditional financial services world can be improved a lot by the innovative tools of DeFi and crypto. And these changes are happening now and fast right before our eyes. And so as DeFi starts to collide with the more traditional world of financial services, we see that the needs and expectations of having real world assets in the DeFi ecosystem is also growing quite a lot. Everything from synthetic stocks to taking out loans over DeFi protocols. And the issue is that pricing these assets in a decentralized way is something that needs to happen now in order to bridge these two worlds together. And that's what we're totally focused on at Lithium. Before Lithium, I founded SendFriend, another fintech company using blockchain technology to create faster international payments for immigrants in the US. Before that, I worked on the Haiti desk in the World Bank for 3 years after the earthquake of 2010. And co-authored the Haiti Financial Inclusion Strategy there, an effort sponsored by the central bank to increase access to financial services for adults. I have an MBA from MIT Sloan and master's and bachelor's degrees from Johns Hopkins.
Hi guys, I'm Oscar. So I'm co-founder of Convergence Finance and also Chief Strategy Officer of Liquify, a leading tokenization platform based in Asia. So I've been in the blockchain space since early 2017 and have been building that tokenization vision since then. Prior to the venture in blockchain, I was a global market analyst at Deutsche Bank. I was also an active investor in both venture capital and private equity firms. So spending time at both, traditional finance and then now moving to DeFi, I see the innovation that kind of DeFi can bring into tokenized assets in the future and try to realize that with Convergence. Alongside Convergence, I'm also co-founder of DAO Ventures. So we are a VC firm that focuses on blockchain and pre-IPO investments, and also venture partner of Exonsi Ventures, which is a venture studio founded by Spencer Dinwiddie of the Brooklyn Nets.
Hey guys, this is Eric, co-founder of Injective. So Injective is a fully decentralized derivatives exchange focusing on perpetual spots and futures. So before Injective, I was working as a trader and also a cryptography researcher, mainly focusing on market neutral trading strategies. And yeah, very excited to be talking to some of the heavy shakers of the industry and also, specifically within the Oracle sector and talk more about this.
Great, thanks, guys. We all have a common goal to break down the barriers of entry to financial services. Lithium Finance uses a collective intelligence oracle to provide precise and timely pricing on private illiquid assets. Convergence Finance is an AMM, which makes private assets interchangeable within the DeFi space. David and Oscar, could you tell us a little bit more about your projects?
Sure, I would love to introduce Lithium to everyone who's watching us live. Lithium, like Convergence, is also incubated by Liquify Labs. Liquify is sort of a leading digital asset firm looking to invest in the next generation of Web3 and crypto capital market companies and infrastructures. In short, Lithium is kind of an antidote for the Reddit world and the insanity that it has bred with out of whack valuations in the public market. And it's also an antidote to the lack of access for kind of everyday traders and people to private illiquid assets. So to be specific, Lithium is the first pricing oracle for private assets based on collective intelligence to give precise and timely pricing on illiquid assets. And our greatest hope for Lithium is to really be this bridge between DeFi and the traditional private financial services functions, and that we can open doors for millions of users, kind of in the spirit of the DeFi movement overall. We want to have everyone on our platform, though, top investors, institutional advisors, and retail investors. We're trying to build a comprehensive community here to facilitate the bridging of DeFi and traditional financial services.
Yeah, thanks, David. Yeah, so Convergence actually builds on the same mission, but on a different part of the infrastructure. The same underlying mission is really to bring real world assets that you and I see in the real world right now and converge out of DeFi space. So how it actually works is that with Convergence, you're able to capture, growth of any private investments that I otherwise get, or VCs and private equity firm otherwise get, including pre-IPO investments, companies that will be going public within 1 or 2 years. Those have great return ratios compared to its risk. Some of the private investment deals, such as tokens, early stage private sale tokens, is something that we also do, and also fractional NFT. So we're trying to break down the private market and make it public. And by using an AMM, we're able to have infinite liquidity and be able to trade at 24/7. So specifically how it works is that we have a launchpad where people, Convergence holder, can subscribe to different offerings, private investments that we had due diligence and allocate to. And from there, they can trade it freely. So the first project on Convergence is listed, which is actually for Lithium, because they work so closely with us and we see the synergy there.
Thanks, guys. You both touched on a shared goal, which is real-world asset exposure in the blockchain space. What are challenges to bridging real-world assets to DeFi and making them interchangeable? And have there been attempts to solve these challenges, and have they succeeded or failed?
Well, at the moment, data oracles don't provide regular pricing on private companies. In fact, in our discussions with potential partners, frankly, we hear a lot of complaints about the quality of service of data oracles for the public markets, right? We've spoken to clients that feel like there isn't enough 10K data available on the blockchain, let alone private company data. So this is really a blue ocean kind of market here, right? And in fact, like, the only way to price illiquid assets is through an expensive, slow, labor-intensive kind of appraisal valuation process, and it tends to price out anyone that's not trying to create a valuation of something very expensive. For example, if you're an existing investor in SpaceX, you probably won't know the latest valuation and transaction price. So, price discovery is more or less impossible because the brokers and investors don't have an incentive to disclose the latest price of private companies, right? Now, if you look at the sort of DeFi world, you can remove the intermediaries and create more efficiency and transparency. So this just means, rather than having to call brokers and say, hey, what did you pay for the last round of SpaceX? We should have a sort of crowdsourced repository of answers for what SpaceX is worth, so that we can drive sort of market enabled valuations of private assets, just like we do in the public market. So this is what we're really excited about.
Yeah, I think for Convergence case, the difficulty of kind of explaining what we do is that real world assets, for the most people, they know about stocks and they can trade during market hours. But the private market that we want to open up to more individuals is as illiquid, basically. A small group of individuals or institutions have access to that, and the rest of the world really has no clue what's going on. A lot of people in kind of token space knows that there are pre-sale tokens, there are private round tokens, that are reserved for VCs and influencers. But can they get a cut of that? Or do they have to snatch, 100,000 people snatching for 300 spots, right? Which typically happens in IDOs. So what we want to do is kind of break that up, make it into pieces that, is instantly tradable, so then they can get access to these. And with DeFi liquidity and greater exposure, we believe that, the private market can be opened up to the public.
Thanks, guys. Eric, congratulations on the successful launch of phase 2 of Equinox mainnet. Can you tell us a little bit more about this phase? What are users now able to do that they weren't able to do before? And what can we expect in the final phase?
Yeah, so basically phase 2 is about us, doing like a co-launch of everything that we're working towards. So the governance module is live. Once, all the markets are being proposed, the exchange will be live as well. So we basically want to make sure that, the core participants of the community, some of the smaller group of active users can start proposing the markets, and we want them to be able to shape, what Injective looks like and what the community looks like going forward. So basically, right now we're working on, making sure that all governance modules have the right parameters going forward, and if not, we can always tune that parameter through a governance vote. And on the other hand, we can always we're working on multiple different types of security testing and creating, making sure that this canary chain will be the canonical chain going forward. But yeah, there's a lot of excitement. Basically, phase 2 means that all the features are going to be slowly rolled out and unlocked, and then phase 3 is essentially the announcement that hey, this chain is canonical and we can have the entire security backings for it. So yeah, a lot of exciting parts coming up. I think this week, once the first market is being proposed, the exchange will be launched, and then from that point on, more and more features will be unlocked, like insurance staking, and also a lot of other components. And if the canary chain proves to be stable and everything, then we can go ahead with phase 3, which is like a full-on unlock of all features and canonical release.
Awesome. David, Lithium recently partnered with Injective to launch decentralized pre-IPO stock derivatives. This is a huge opportunity for both Lithium and Injective. We're integrating Lithium's DMI mechanism, which leverages collective intelligence. Could you tell us a little bit more about this technology so that our audience can better understand how the process works?
Absolutely. I think it's easy to get bogged down in some of the techno speak. And let me just start by saying that we're super excited to be partnering with Injective, just one of the very best projects in the DeFi space, and a great team, nice people. So, on the Lithium side, to be clear, we're an on-chain pricing oracle. We fill one of the most important missing gaps between the real world, financial services sector and DeFi. The protocol leverages collective intelligence to price real world assets, especially assets that are really hard to value, like pre-IPO stocks, private equity, and other illiquid assets. And the way we do this is through a system with two basic stakeholders: wisdom seekers who come with questions. That might be somebody who says, hey, I want to know what SpaceX was valued at in the last round. And then wisdom nodes. Wisdom nodes would tend to be, investors, institutional asset managers, basically anyone with information. And so we connect these sorts of buyers and sellers of information with some game theory technology to find the dominant truth from all the respondents who give answers. And that is called the DMI mechanism. And basically, if you come to ask a question, you will stake some tokens. And if you give a great answer, you'll be rewarded with tokens. And suppose you try to manipulate the protocol, you'll be punished with the protocol taking away your tokens.
Thanks, David. Eric, Injective has launched many innovative derivatives markets, such as synthetic products, stock futures, NFTs, cross-chain assets, and many more. Now that we've seen the pre-IPO stock derivatives integrated with Lithium, what does this market mean to Injective users? And what other innovations can we expect from Injective to further shape the DeFi ecosystem?
Yeah, it's always very hard to kind of price the unpriced. So that means that, pre-IPO derivatives, in order for any type of futures market or perpetual market to be fully functioning and secure, you would have to have a consistent stream of price feed that's true to the current events. So obviously, this creates a problem with anything that's pre-IPO or pre-trading, because most of the trading being done is mainly off of the public market. There's no substantial amount of activities, and usually it's like a decent sized block trade as a percentage of the total shares. So it creates a natural problem about the volatility of the price, because these blockchains might have discounts and premiums depending on the seller's needs and demands. So our job is to make sure that there's kind of like a pass-through oracle or like a service that will kind of filter these price out and create like a true value price to it. And this is why what Lithium is working on is so exciting, is because they can kind of create these intermediary price before every single significant transaction, before an IPO happens, and essentially create this price guidance for any type of derivative market that they're trying to work on or track the pre-IPO pricing of the equity company.
Oscar, the Convergence protocol is enabling seamless interchange between wrapped security tokens and utility tokens to converge real-world assets with DeFi liquidity. Can you explain the details of this interchange and the token wrapping module? And what improvements will we see in the future with Convergence?
Sure. So with normal off-chain investments, you basically sign a contract, become either LP of a fund, or you just get underlying shares. But these are reserved for high net worth individuals. So what we do is that we work with asset owners that actually have the asset and break it down to have fractional ownership of that using our token wrapper module. And through an AMM, we can seamlessly trade 24/7 with unlimited liquidity, so then people can get pieces of it. Now, how that actually, the mechanism wraps up in the end is that by the end of the liquidity event, so it's different for every single asset. For example, in a pre-IPO, it would be when they go kind of IPO, go public. With token investments, it can be the unlocking schedule. So once that liquidity happens, people can bring their tokens, the wrap tokens, onto our platform and trade it for the actual exposure, no matter if it's a liquidation events or it's tokens. So right now, the core focus is basically building different use case. The real world asset space is so big that we focus on first, locked tokens, like what token crypto funds have unlocked right now. We have also NFTs. NFT is a great market right now that has unexposed liquidity. It's very expensive to buy, the really kind of collectible NFT. Can we break it down and offer it to kind of Convergence users so that within a certain time frame, they can auction it off and get the money back as investment? And lastly is private investments, no matter if it's early stage in terms of VCs or late stage of private equity. So in the future, we'll see more and more use case and work with new asset owners and funds to offer those exposure to our users.
Thanks, Oscar. Eric, as Injective is launching mainnet, what's your plan to increase user adoption and stand out from competitors? And what features will help Injective to get ahead?
Yeah. So right now, obviously, it's pretty intentional for us to keep, the user base to be small, so that this way, there's not a lot. We're not posting like a giant honeypot to the Canary chain. So in case something goes wrong with it, at least we can refund all the core users with the limited amount of value lock at the moment. But in terms of kind of like end of phase 2, like post phase 3 push, we have a lot of kind of like a self-sustaining mechanism, like creating this feedback loop amongst all the ecosystem participants. So for example, number one is that Relayer can get 40% of the trading fees being shared across all the users trying to access through that Relayer. There's also a lot of very interesting aspects, such as basically like a liquidity mining and also like a maker rebate program. So I think these are all going to be, a mechanism design that's going to be highly impactful to liquidity and the user base and the user experience for the exchange. And on the other hand, we have a lot of things, that are just being saved up for a bigger push, just in general, for, especially for Asia and also for Europe. Just trying to basically make sure that the users and as many people as possible are migrating from Ethereum to the Injective chain once we prove to be stable.
Thanks, Eric. David, could you share more details on how proof of wisdom staking works? And how does it account for possible attack vectors if the nodes decide to conspire and skew the results?
Absolutely. Great question. So the protocol has a specific role for wisdom nodes to provide their expert prices, in a kind of structured way. Wisdom nodes will answer series of questions about pricing of upcoming liquidity events or private stock sales, and will stake some of their tokens to signal confidence levels. So for example, if you feel like you have the right answer on something, you might bet more tokens on your answer. Reputation is another added incentive and enhancement to the correctness of your answers over time. Initially, individuals who answer on the protocol may have low or no reputation, but as their performance kind of plays out, they receive higher rewards if they do well. And the closer a wisdom node is to this final ground truth that the protocol will give to the wisdom seeker, the higher their compensation. So there's a way to earn money essentially by participating in the protocol. In addition, the more someone signals their confidence in the results, the more they earn, enabling a kind of a strong feedback loop to encourage really honest and positive, transparent behavior. On the flip side, if a malicious actor comes onto the protocol and tries to manipulate the ground truth, they may also try to significantly stake tokens, right? But once the consensus answer is uncovered, the malicious actor's reputation will be hurt and they'll lose their stake. And finally, if someone attempts to collude with many malicious actors, the amount of funds required to stake plus the lack of direct influence means that all the funds will get slashed and the resulting answers won't be impacted. So these are just part of the kind of protocol development process that we're deep in the middle of now. But for anyone who's considering using the platform, either as a node or a seeker, the best action is always to answer honestly and stake tokens relative to your confidence level.
Thanks, David. Oscar, since your background is in tokenization and financial markets, and you have rich experience on leading security token issuance platforms in Asia, could you share a little bit more about your thoughts on where you see tokenization, say 5 years from now?
Yeah, sure. So with tokenization, I've been in this space since the last few years. And what's happening in the background for a long time is that, investment banks, a real estate developer has been knocking on doors to get this into reality. And I think one of the biggest concern is that there's not enough liquidity for these security tokens once they're listed. And that's kind of why this sector never really took off. But from here on, I think from 5 years from now, we see that there's a massive trend on people adopting these technology. And Convergence is kind of aiming at that as well. For example, liquidity is the biggest concern. And through AMM, we're able to provide them so they can buy in and out of their positions anytime they want. That's number one. And also for us, we kind of carefully select different quality of assets. That's the second concern of more security issuance in the past, where subpar assets are being held on chain. And if there's, tokenization is not a magic dust that anytime someone tokenizes something, it becomes more valuable. The audience have to understand that these are real world investments that, like real estate mirrors the real market. So for it to take the next step, I think understanding of diversification and having assets on chain, that connection needs to be made. And I think that education will come soon where people realize, I don't want to follow a market that strictly mirrors kind of Bitcoin prices. We want diversified kind of exposure in every single asset class, real estate, private equity, even collectibles, and everything held on chain. And I think that's kind of the vision 5 years from now.
Eric, what are your thoughts on the future of tokenization?
Yeah, so I think that generally for tokenization, first of all, there's two different types. One is kind of like a synthetic representation. The second one is kind of like a actually backed, physically backed type of tokenization. So I think in terms of physical backing, that's going to be pushed a lot slower than we always expect. simply because there's a lot of regulatory and money transmission laws that people have to comply with when it's physically backed. But because of the Oracle solutions coming up daily, and also as these Oracle solutions worked on by Convergence and Lithium are getting more and more adopted and secure, these can be like a trusted source of truth for all these type of like rare assets or like less frequently traded assets, and create this synthetic asset for it, thereby making it as true to the underlying as possible. So I think that's going to move along a lot faster, and we've already seen a couple solutions coming out with synthetic assets and everything like that. And really, from this point on, sky is the limit.
David, since Lithium Finance is the first collective intelligence pricing oracle for private illiquid assets, your main participants are probably analysts who specialize in the field. In the event of pricing pre-IPO assets, have you noticed significant deviation in the answers and data submitted by participants? And how do you evaluate that their evaluation was accurate?
Great question. So it's important to make clear that the data accessibility, it's important to make clear the availability of the data during the interaction with the protocol. So for example, when a question is asked, from that point on, no one knows the answer is being submitted. And we've had to think the kind of order of operations through pretty deeply here. The only person that knows the answer getting submitted is the person submitting it. They're private to everyone except for the protocol. The protocol uses its logic to aggregate the results using a kind of multi-party computation technique to ensure everything is private and accurate. The multi-party computation injects some randomness into the data flow so that any like kind of man in the middle attack won't reveal any information. Right? So the results of the data go through the private and random selection process next. And then once all the data is aggregated, the final price is published. So this is a long-winded way of saying that no one knows what anyone else has said until the protocol reveals its kind of final answer, right? So once that happens, the rewards are sent out and the reputations are updated. And finally, there's a kind of post-event audit, and the sequence and path for the data will be disclosed after the fact. But for every kind of question asking event, specific identities are hashed to prevent a malicious actor from aggregating the reputation information, him or herself. So I hope that helps.
Yeah, thanks, David. And what happens if the ground truth is never revealed? Do the wisdom nodes receive any rewards? For instance, if a company never goes public, would they get any rewards?
Well, once the final answer is revealed, the source is also visible to enable verification of the valid answers. So, the final scores are calculated using our DMI mechanism algorithms. It's available on a regular basis. I think that, the ground truths do get revealed, but if nothing is accurate, then no one gets a reward or a reputation enhancement if the company never goes public. So in other words, I think the protocol will finish its job, but no one will get compensated if the valuation process was kind of a moot point.
Got it. Thank you for that explanation. This next question is for everyone. Are there any exciting upcoming developments that you can and would like to share with the audience today? You can start with any of you. Yeah.
Well, on our side, sorry, I feel like I'm being too squeaky a wheel, but we do have our IDO upcoming soon and a mobile app. We will make some announcements in the next couple of weeks. So please follow along on the Lithium Finance Twitter page for updates.
Yeah, for Convergence, I think in the short term is, as I mentioned before, more investable asset offerings and mostly of it is focused on private sale tokens. So, Lithium, as I mentioned before, is trading, having 7x from their public sale price right now in Convergence. And so we're very excited for the idea for Lithium as well. In the long term, is building up case studies and having them on a product suite, for example, our CompDAO. So to let other people build on top of their protocol and make, democratized investment opportunity for DeFi.
Yeah, for Injective's case, so we're launching our exchange very, very soon. So basically, once the first governance proposal is done, and I've already seen a couple of ones that are getting the parameters right and that are good to be passed. And then from that point on, basically, it's a lot of testing, in the live trading system, in a live trading environment, and making sure that everything goes right with perpetual and also the insurance taking along with it. We're also going to be testing some liquidity mining features and also a couple of other new features that we've been working on that's a little bit more off-chain. But yeah, like a lot of exciting stuff ahead. So basically, we want to make sure that for phase 2, we test everything that we need for it to be canonical, and making sure that, when there's hundreds of millions of dollars a year within a PEGI contract, we're going to be just fine.
Great. We have one question from an audience member today. This is for all of you. What do you think of overall regulation development globally and what the crypto market will look like in the next 2 years and the years to come?
I'm happy to take a stab. I mean, as someone coming from the payment side of this universe, I do have a little bit of a perspective on how blockchain crypto fits into both regulation of like traditional financial services as well as the DeFi world. I mean, look, it's obvious that the IRS has expanded its mandate. Whether they're going to go after unpaid taxes in crypto, I don't really know. I think that it's a bit more kind of interesting and nebulous what the SEC and FinCEN are going to do. But, with regard to enforcements around unregistered securities, that is always a big question. It doesn't look like at this point Gary Gensler is going to attack that super seriously, because you can see from his public statements he's talking about a lot of other things. But on the FinCEN and financial crimes piece, I think there's a major lift that at least the US regulators have to do on how they want to treat unhosted wallets and the whole DeFi ecosystem. Are they going to try to enable a world that's very innovative and can help people that doesn't enforce more mainstream know your customer rules? Or are they going to crack down on it and say that it's bad for financial crimes and money laundering, terrorist finance, and all of the above? So, it's tough to make a real prediction right now, but it does seem like their budgets are growing. So we all kind of have to be on the lookout for what the next move is.
Great, thanks so much, guys. I think that wraps up the questions on my end. So I'll open up the floor for the three of you to touch on anything that we may have missed today.
I guess I'll give some concluding thoughts here. I think between the three companies, we're really building onto the vision of bringing real world assets on chain, no matter in terms of derivatives, synthetics, AMM exposure, and also as a pricing oracle. And I think this journey will be something that throughout time we'll work towards. And people realize that, you don't just trade utility tokens on chain. It's more about anything investable or anything collectible that can be traded will be traded.
All right, thank you so much, guys, for being here, and to our audience for tuning in. Can't wait to see the Oracle's ecosystem develop further and see what projects you all have in store.
Thanks.
So much, guys.
Thanks for having me.